The UK's financial regulator, the FCA, is approving crypto investment products. But according to this article from TradingView, there is a catch. Today's episode is sponsored by Cake Wallet, where you can send, receive, and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys. Available today on iOS, macOS, Android, and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening everybody and a warm welcome again back to Enter Crypto with me, Chris Kenyon. Now in today's video we're going to be talking about the UK regulator, the FCA. According to this article from Cointelegraph, there is actually a catch to their recent approvals. And so as always guys, let's quickly jump straight into this article, see what it's about, see what we can learn, and then we'll comment after. So crypto industry figures have welcomed news that the UK's main financial watchdog will make it easier to list crypto investment products. On March the 11th, the FCA announced that it would allow professional investors to trade crypto exchange traded notes or ETNs created by recognised investment exchanges. Even so, restrictions that prohibit the participation of retail investors remain, making the FCA's announcement a partial victory only for broader crypto adoption. Regulatory conditions in Europe prohibit the offering of an ETF for a single asset such as Bitcoin or Ether, and this makes ETNs the favoured exchange-traded product in the European Union and the UK, where financial rules are still broadly harmonised despite Brexit. With the green light from the FCA, British traditional finance and UK traders may shortly have easier access to crypto-tied financial products. Since the go-ahead also comes with conditions, it is perhaps unsurprising that the caveats become the focus. Natalia Latka, who's the policy director at blockchain analytics firm Merkle Science, told Cointelegraph the FCA's decision to allow recognised investment exchanges to list crypto ETNs is a significant move forward. Despite the restrictions, this action not only fosters the integration of crypto-related products into a regulated environment, but also narrows the divide between the crypto sector and the traditional financial industry. Latka also noted the exclusion of retail investors. Despite aspirations to become a crypto hub, the UK's approach underscores a notable hesitancy to embrace the rapidly growing interest in crypto assets among retail investors, said Latka. Cointelegraph spoke with George McDonough, the co-founder and co-managing director of KR1, which is a European digital asset investment company. McDonough lauded the move but said the market needs to be more accessible. And the news that the FCA will not object to requests from RIEs to create a UK-listed market segment for crypto asset-backed ETNs is a move in the right direction for the UK regulatory environment for crypto, McDonough said. McDonough also focused on inclusion, stating that more companies need to be enfranchised into UK markets. And the article does go on, and if you want to read on a little bit more, although you get the point now, you can. I'll leave a link in the description box below. And so the catch here is that the average Joe, like me and you, cannot use this product, and we can't even leverage trade in the UK. That's the average retail investor. You need to be an accredited investor or an institutional investor to be able to do those sorts of things. And this is, of course, all in the name of protecting us. You know, the government is trying to protect us, and they're doing this for our benefit. You know, trying to protect us from ourselves, if you will. And the reason I always think this is really, really silly is that we're allowed to, as individuals, gamble. You know, we can go and blow all our wages and all our mortgage money or rent money on the horses or on the football of a weekend, and there's nobody there to actually protect us or stop us from doing that. And when you think about it, that's much more damaging than investing in something like cryptocurrency or stocks or something like that. It's much worse to gamble. Actually gamble on the bookies, the bookmakers. And so if the government was genuinely interested in trying to protect us, then surely they would do that as well when it came to gambling, and they don't. So in fact, they don't even tax you on your winnings. You know, the government doesn't even tax you in the UK if you win a load of money on the horses. It's just a win. You know, you don't even have to do it. So they actually make it very easy for you if you're gambling. But so there's a lot of alpha though. I think that's one of the reasons they don't let us do it in the UK. They want to leave all that money making up to the institutions. that they can actually control. And I think for them, we would kind of muddy the water. If we all started getting involved, the average person, we would damage their sort of little game in the markets, and they like to be in control. They don't want us jumping in and muddying the water, because it's much harder for them to make money if they've got us jumping in and we're unpredictable and we're working off our emotions. You know, the average retail investor I'm talking about. And they like a game where it's very predictable so that they can make money. Now, there's actually another concern that I wanted to raise as well with ETNs and ETFs and other sort of synthetic assets and paper. You know, we can call it paper Bitcoin or paper gold, and that is that we'd actually inflate the supply of Bitcoin, just as we've kind of inflated the supply of gold by creating these derivatives of gold, i.e. paper gold. And so by leaving a delay in settlement with the clearinghouse, through the markets, we actually don't need all the gold to physically be in a particular place for us to be able to trade. So it leaves a lot open to sort of market manipulation, does these paper assets, and we're going to have that with Bitcoin. And even though you get a lot of the Bitcoin maximalists saying that there's only ever going to be 21 million Bitcoin, now that's true in the world of Bitcoin, but if you're trading paper Bitcoin, there's no limit to how much we can do, how much we can trade that. And if I don't have to sell that trade in real Bitcoin for another, say, 90 days, if I'm talking about institutions here, not individuals obviously, then I can trade a lot of Bitcoin that doesn't actually exist at the moment, and it doesn't matter because I don't have to settle it for the next, could be 60 days, could be 90 days, depends whatever the government regulation is for that, the jurisdiction of wherever it is that the company is based. But that's going to inflate the supply of Bitcoin. I don't think a lot of people have actually raised this or thought about this before. It's something I only started thinking about a year ago. So there's something to be aware of there. So even though this hardline set of 21 million Bitcoin will only ever be any more, that's only true in the world of Bitcoin and crypto. If the government and the companies get together, they can inflate Bitcoin, in the sense the paper Bitcoin. And paper Bitcoin might be enough. And if they can make it accessible to everybody, and that's to the average person, to the institutional investor, to buy paper Bitcoin because it's cheaper and it's quicker to get in the trade, it's quicker to get back out of the trade, then what's the need for actual Bitcoin, especially if the fees are high on Bitcoin? So, it's just something to think about. I'm not saying it's going to happen. I don't know if it's going to happen. But I do believe that there's a lot of market manipulation in the precious metals markets, with gold, silver, platinum, palladium. And I think this is one of the reasons is because of all this, paper gold and paper silver that we've got. So just something to think about out there. Let me know in the comments if you agree or disagree, or if you've got any other theories or ideas as to what these ETNs and ETFs how they might affect Bitcoin and crypto in general. As always, guys, thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow evening. Take care.